Well, thank you so much for spending time with me on Money with Mark Albert. We are in the Smart Money Question series where we deal with smart questions to guide your estate, tax, and legacy plans. Today, we're looking at question 6. I would very much appreciate it if you subscribe to this YouTube channel if you're not already subscribed. And if you do like the video, really would appreciate a thumbs up. And so we're going to look at the question today. The question today has to do with critical illness. And the question is, what medical conditions does critical illness insurance cover and how do payouts work? Okay, so critical illness, it's different than life insurance. So life insurance, it's the benefit, it's a death benefit. So you have to pass away, you die, and then they pay out to the beneficiary. With critical illness, you are the beneficiary, and it's considered a living benefit. So it's a little different in that sense. So let's look at the conditions that are covered. So in Canada, first of all, it's a tax-free lump sum that you would get, and it's a living benefit upon the diagnosis of covered health related conditions. So the standard policy in Canada, at the core of a typical policy, most aspects that get claimed are these four things here. You could add a fifth to that mix. There may be a sixth, but there's not that many that are the core of any critical illness policy. And then in a more comprehensive sense, you would add to the core all these other things, and there may be more. So typically it's around 25, 26 conditions that are covered on this type of policy. You can get critical illness policies that just covers cancer or just covers heart, things like that. But you want to talk to your insurance advisor to make certain you know what you're being covered, what you're not being covered on, the type of policy you have. So the typical policy that I do for medically underwritten covers all this stuff. Now, this is just a really quick list, but within your policy, once you're approved and you get your policy, there'll be a definition of what each of those is and the conditions in which the insurance company agrees to pay out. And so you would want to read that through and understand that because you don't want to think you're covered on something when, like, for example, cancer here says life-threatening cancer. So you may see the word cancer and think, oh, if I get any cancer, I'm covered. No, that's not necessarily the case. They define it as life-threatening. And so within the policy, they'll get into more details as to how that's defined, how they interpret it. And then you're protected based on how they interpret that. So that's important to know, right? So when we talk about the payout, so you have to make a claim. So if you pass away, sorry, it's a living benefit here. So if on the living benefit side, when it pertains to critical illness, if you're diagnosed with something that is specific to the list that's covered, they usually have a survival a period of time that if you're still alive, following diagnosis, you can make the claim. Then you have to send in your paperwork to like medical paperwork. So the diagnosis, the doctor would write a little something, and they may request you to send copies of medical documentation to support the fact of the diagnosis, and then they pay out tax free. So that's pretty good protection there. So 100%, the typical policy, the way it works, it's 100% tax free payout, and then they get that survivor period of time after diagnosis. The policies I do, their 30-day survivor time frame. You want to double check the policy you have because it may be a little bit longer. Each policy is unique to the insurance company that you're with. So there may or may not be in your policy a partial payout or a kind of like early discovery payout. And what that means is you may potentially have a policy that has these clause in it. So it would cover something like maybe early stage prostate cancer or early stage breast cancer. These type of things, they may have several little categories where if you have that in an early stage, we'll pay out not a full, but a partial. Okay. And that's just something that you may or may not have, but it's good to know and to ask the question if that is in fact available. So we talk about the strategic benefit to your financial plan and to your estate plan. And this is really, you don't think about it, but the things that we're going to have on this list, they're quite significant, and we don't realize it. So the way I price out um, the how much face amount or how much protection you need. So it's like an income replacement, right? So if you're not well and you're not able to work, how much money do you make? And if you want enough protection to make sure you're covered for a year's worth, if you had to be off for a year, then you would get the amount of protection equal to your salary, for example. And if you have a business and your business has overhead that requires extra cost, then you would want beyond your income to cover expenses related to your business so that your business can continue on depending on those circumstances. So what I found over the years is one time just getting your salary's worth of protection for 1 year doesn't usually and doesn't always cover it. And I had a client who went through cancer, and it would basically it ended up being about 3.5 years or so of time where they weren't able to work. They were still working part-time to some extent, but their income was significantly reduced, and they had a protection of critical illness for 1 year. So, so that didn't line up, but you don't know, no one knows the future. So we just have protection just in case something does happen. But if you do have it, the benefit to you is it can uh, uh, preserve your capital. It prevents you from, in an early sense, liquefying or liquidating your long-term investments, your retirement resources. You may have had RRSPs and TFSAs that have really built up over the year in which you plan to use in the retirement years. So cash flow stability. So it replaces lost earned income for the person who's insured. And, you know, if your spouse has to care for you and that spouse not able to work, there's resource there as well that can be applied to that. And it also ensures that you don't go into debt further. And it also can make sure that your mortgage payments and other debt obligations are dealt with, which stabilizes your cash flow. It's tax efficient in the sense that you receive a payout of a lump sum tax free in Canada. That's how that works. It's really great. And from an estate planning standpoint, it preserves the value of your estate. So basically eliminates the need to accumulate high debt. If you accumulate debt, that reduces total value of your net worth within your estate. And that can happen very quickly during a health crisis if you are not properly protected. So that's important to know, and that protects your estate for your heirs, which is great. Now, also it can protect resources that you had planned to give from a philanthropic standpoint or legacy goals to give to registered charities, so you can get a tax receipt, or there's a cause that you want to be able to give to in your passing. And so these are some things to really consider. Critical illness is, in fact, a very viable insurance product. A lot of times when people think insurance for themselves, they're thinking life insurance, and justifiably so. But critical illness is actually a significant complement to that. And the way it works is, if you were diagnosed with one of these things, and then you made a claim, they paid out in full, and you also had life insurance, and eventually, and unfortunately, you didn't make it, that you would also get paid. Your family or the loved ones or whoever is the beneficiary would get the life insurance following that. But in one of the most difficult times in your life, if you're going through your worst health circumstances, if you have financial challenges in addition to that, it can really make things more difficult. And my contact information's here if you wanted to discuss further. Of course, I am licensed in Ontario, so I would not give advice outside of the province of Ontario. So really appreciate you being with me. I trust that you guys are all doing well, and looking forward to seeing you again soon. Take care. We'll talk to you later. Bye.